Hello and welcome to Big John's Thoughts on the Market for March 2016. When we look at the numbers for February, we see that there's continued weak demand, and again, that's a direct reflection of the overall economic climate that we're facing in Alberta right now. I want to run through a few of the key numbers that we're keeping a close eye on and talk to you about some interesting facts around affordability at the end of this blog. In terms of absorption, what I want you to remind you is that anything 0 to 2 months worth of supply means we have a strong seller's market. 2 months to 3.5 months worth of supply is a balanced market, and 4 months worth of supply or more means that we're into a buyer's market, and definitely that's what we're seeing right now. Overall absorption is sitting at about 5 months worth of supply. A year ago, it was about 4.5 months worth of supply. So it has gotten a little bit softer versus a year ago. What we also see is the single family is sitting at about 4.25 months worth of supply, whereas a year ago it was at 4 months worth of supply. Attached homes are sitting at 5 months, and apartments are sitting at 8.3 months worth of supply in the market. And a year ago they were at 6.19. Might mean there's some really good opportunities if you're looking at apartment condos for that first-time home buyer, investor, or maybe downsizing. There's some really good buying opportunities in the apartment condo sector right now. Sales to new listings, we're seeing that there's about 0.39 sales for every new listing coming into the market. A year ago, the number was 0.41. Again, we'd like to see that number around 0.5 or higher. So again, it's a little bit lower. Again, just a reflection of the overall market that we're in. But we are seeing that sales are down 6.6% versus a year ago and down 37% from our long-term average. So we are definitely seeing downward pressure on the demand. The good thing is that new listings are also down 1% versus a year ago. And what we're seeing is that overall listing inventory is up about 2.7%. So versus long-term averages, we're definitely down. But versus a year ago, we're staying relatively stable, which is good news. We need the market to stabilize before we can hope for any kind of a recovery. Now, one thing I want to talk to you about, sort of interesting, is when we look at affordability. We hear about, the Vancouver market, the Toronto market, how strong they are, prices are going up. But when they look at affordability, they take a look at the average home price and what the cost of owning that home is and compare it to average household income. And what's really interesting is that in Vancouver, it takes 109% of the average household income in order to support the average sale price or owning the average home in Vancouver. Completely unaffordable. Can you imagine taking over 100% of your paycheck just to pay for your housing? Absolutely crazy. But Toronto isn't far behind at 71.4% of your income. Victoria is at 52%. So when we look at Calgary right now is sitting at about 38% of median household income that it will take to and own the average home. So again, the affordability here in Calgary, it looks really good moving forward. Sort of anything between 30 and 40% shows a real strong affordable market moving forward and room for price growth. So once the economy does turn around here a little bit, once the job situation is more stable and people feel more secure with their job situation, there's definitely going to be some room for upward pressure on prices in Calgary. No, it doesn't look like it now, but again, this is what the numbers are showing. And maybe be thankful that you're not having to buy in Vancouver with those astronomically high prices. Couple places where there are great opportunities in this market. If you are looking at apartment style condominiums, some great opportunities there. Lots of inventory, some really good prices that are out there. But also if you're looking at moving up, if you're looking at moving into a larger home, the difference between your home and that larger home, the price difference is probably near the lowest it's ever going to be. And combine that with low interest rates to fund that difference. If you are secure with your job situation, might be a good time to be considering making that move up, buying an investment property, because this market will come back. Again, we just have to take a look at the oil markets and whatnot. And once they start stabilizing, we will see jobs in this province. We will see people coming back and we will see strength. Now, again, I'm not looking at this as a real rosy picture because we are taking a hit in our market, but there are opportunities out there, and we're seeing some large investors, some large institutional investors starting to take a long, hard look at Calgary because it is very affordable. They know that our economy isn't going to stay soft for a long, prolonged period of time. They know that we're very resilient in this province, and there's going to be some great money to be made in real estate. Don't miss the opportunity. If you're thinking about it, give us a call, send us an email. We'd be happy to talk to you about it because, again, we really believe in the Calgary marketplace and we believe there's some great opportunities out there for our clients. If you have questions, concerns about the market, let us know. We're here to help you. Have a great day.